Have you ever wondered what actually happens when you apply for an IPO and what really changes after a stock gets listed? Most people invest without clearly understanding the difference between the primary market and the secondary market, and that confusion leads to the poor decisions. So let us simplify this in the next 2 minutes. The primary market is where a company raises money for the first time from the public. Imagine a company that wants to expand its business, build new factories, launch new products, or reduce the debt. To do that, it offers its shares to the investors through an IPO. Before this stage, the company's shares are not available to the public. When it launches an IPO, investors apply for those shares and the money collected goes directly to the company. That is the most important point. In the primary market, the company receives the funds. Once those shares are allotted and the company gets listed on the stock exchange, the secondary market begins. This is where everyday buying and selling happens between the investors. Here, the company is not raising money anymore. Instead, the investors trade shares among themselves based on the demand and the supply. Prices keep changing because buyers and sellers decide what the stock is worth at any given time. You can think of it like this. Buying in the primary market is like purchasing something directly from the brand, while trading in the secondary market is like buying or selling it from someone who already owns it. In the primary market, shares are newly issued and liquidity is limited. In the secondary market, shares are already issued, liquidity is higher, and the price discovery happens. If you want to invest at the beginning of a company's public journey, you apply during an IPO. If you want flexibility to buy and sell anytime after the listing, you use the secondary market through a broker. Both the markets play different but equally important roles. One helps the companies grow, the other gives the investors the opportunity to trade and potentially build wealth. So, if you are serious about understanding how the market truly works, start with the strong basics because clarity builds the confidence. Subscribe to Tradejini YouTube channel and keep upgrading your market knowledge. Thank you for watching.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing. The securities are quoted as an example and not as a recommendation.